We're supposed to be starting the show. Really? Come on. We're supposed to be starting the show here. But
Excuse me, just 1 minute, 1 minute.
yeah, go ahead, finish your tweet.
Thank you. Hello?
Stop.
Hello?
Stop. Put the phone.
No, I do not need, I already applied for credit elsewhere, but thank you for calling. In fact, you've called me, I think this is probably your 7th call in the last 24 hours. So if you could take me off your list, that would be great. I'd appreciate it. Okay, thanks. I'm trying to film a show right now. Thanks. Okay, bye-bye. All right. Sorry
All right, now we're ready?
Yes.
Sorry about that, producers. Okay, now we're ready. Okay, let's go. Really?
Right. So, one more call.
Really?
Hello? Yes. Yes, I know I applied for a credit line with someone else, and it wasn't you, but thanks for offering me all this money for free. I do appreciate it. Thank you very much. Please stop calling. Okay, that was it. No more.
Okay, put it
So
down.
I applied for this credit line, and everybody... Oh, hold on 1 second.
Really?
Yes, be right with you, folks. Hello? Yes. Yes, thank you. All right, this one's annoying me. He's called me like 4 times in the last
You know
hour.
what? Did you not do the opt-out?
All right, I'm told I need to opt out, and you'll stop calling me. Would you please stop calling me? Thank you.
Did you do the opt-out?
What opt out? Yeah, I did it a few years ago.
You got to do it every year.
I did it. It was like 4 years ago.
Do it again.
All right, one more call.
No.
Oh.
Stop.
Oh, hello, everybody. My name is Barry Horvath, and this is Moving Forward TV, your local market update.
And I am Dylan Gaston. Thank you for joining us today. So we're doing our little thing on credit today. And I know that we've done credit many times, and maybe you've seen some of the past shows, and maybe you haven't. But we had a great lunch and learn last week, and we had Mark Tita from Certified Credit Reporting, who's been in the credit industry forever.
Mark, hey, Mark's calling me.
Mark's calling.
Hello, Mark. What's up?
Mark has been in the credit industry forever, and he gave us a great luncheon, didn't he?
Yeah, no, Carrabba's gave us a great luncheon. He gave us great information, so let's be clear about that.
But he did. Yeah, it was both. So if you guys missed, thank you for all who attended. And if you guys missed it, definitely sign up for next month because we're doing Carrabba's again.
July 11th, we'll have that. It was really good. We had a bunch of realtors come out, and you know what? Knowledge is king, and those real estate professionals that are learning to take the additional steps to learn a little more, to educate their buyers. Because let's face it, credit affects your life.
Right.
Every way, no matter how you turn.
And
you know, from a deposit on the new home you bought on your electric or water, they pull your credit to see if you need a deposit or not.
Right.
I mean, that's the difference of you needing
car insurance.
$500. Your car insurance.
They're going to pull your credit.
The insurance industry thinks that you who are more responsible should get better rates because if you're responsible for your bills, you're more responsible on the road.
Right.
Go figure.
So I know. So we wanted to go over some of the major things that a lot of misconceptions, and then from last week's we had a lot of questions come in. So we figured we kind of like read to you guys some of the Q&As and things to because there's but first let's touch on there's 4 really main things that hit your credit. Number 1 is your payment history. Everybody knows that you have a late payment. Yeah, it's going to bomb your credit. Expect it. Balances. How high are the balances? If your credit limit is $5,000, if you're at $4,999, that hurts.
Ouch.
A lot that hurts. Believe it or not, almost as much as a late payment. So it hurts a lot. The other thing, how long have you been in the bureau? A lot of people will like pay off all these cards and close them all out. and then just keep the new one that they just opened,
Did you
a
just
month
close-
ago.
I think you just closed 4 accounts, if I counted right.
And that's bad. And that's bad.
Why did you close 4 accounts?
I wouldn't do that. Here's the key. You need to keep the longest one, the one that has been you've had for a long time. Don't close it. Don't ever close it. I don't care if you never use it again. Don't ever close that card because it goes by length of time. That's a lot on your credit score, and people don't realize it. And then, of course, your credit mix. A lot of people don't realize either.
Right.
You can't have
I
just a student loan and that's it.
Yeah, you got to have more. You got to have installment loans. You got to have credit card loans. You got to have car loans. You just got to have a mix of different credits
Right.
out there. So on the teaser we just did, when you apply for credit, believe it or not, it's a big lead source in the industry. So as soon as you
Yes.
apply for anything, there are masses of companies that are out there. I don't want to call them vultures, but they're vultures. They buy these leads and they throw out, nets to see, okay, you applied for credit here, so maybe we can get you here. And they know there's a high percentage chance they know you're shopping for credit. So they will mass market you, call you, email you, put you on lists. Next thing you know, it's on your Facebook feed that you're getting a loan. All these options out there.
And your email. They make you put an email address in too. So now your email is just getting flooded.
And, they throw that net out knowing that a percentage of people will actually buy from them. And they don't care about you, so that's part of it. So do we want to throw them that website they need to go to now to opt out of
Yeah,
that?
that's a great idea.
So you might want to write this down, because I did, because I can't remember it. But it's optoutprescreen.com, optoutprescreen.com. And if you haven't done that in the last few years or couple of years, go in and opt out again, because, and I know people say, well, they're going to call me anyway. Yeah, but it is illegal for them to do that.
Right.
And it will slow down those calls. So.
And we actually have a lot of information for what it's worth, other websites that can certainly help you. And if anyone would like, we have a ton of information on this packet here that was given to us by Mark at our Lunch and Learn last week. And we're happy to share this with you as we go through some of the other things. So if you guys want some more information on it, just shoot us an email. We're happy to share that with you.
And we're all about helping people with their
Education.
credit.
You know what?
Education. Because we're a learning
the
machine.
more educated buyer that there is out there, the smoother the whole transaction goes.
Yes.
For you, the realtor, for us, the mortgage company, and for the consumer and the title company, everything goes much smoother if people are educated, and that's what we're trying to do.
It makes a big difference. It really
Yeah.
does. So we got a lot of questions from our
Yeah, so
Lunch and
let's
Learn.
do some questions.
So we put those together for you just so that hopefully these answer some of your questions. But the one big question we get: does my score determine whether or not I get a loan? Well, that might sound like a silly question,
Right.
but it's really not.
And you might think you know the answer.
Yeah, but it's not just your credit, but it's also your income, your employment history, and your housing experience that can affect whether
And there
if you have
are-
a prior housing experience.
And if we're talking mortgage loans here, there are definitely lenders or lending institutions or programs where you don't need a score at all. So does the score help? Absolutely. It gets you something, it's one of the many factors that go into it, is what
All
we're
right,
trying to
and
say.
I have another great question. Will my credit score drop if I apply for a new loan?
Another great question.
Don't tell them. We'll tell them right after this. big question.
Yes.
Will my credit score drop if I apply for a new loan? Well, what do you think, Dylan?
It could, absolutely. Yes, there is and depending upon where your score is, if you have a lower credit score already and you have like a bunch of credit pulls coming in, yes, absolutely, that is going to impact, and that's going to hurt you a little bit more into getting that loan or not. Or if you have brand new credit, you're like, 19, 18, 20 years old or something, and you have not established any credit depth yet, then yes, that's going to impact you. But if you're someone who's, been around for a while and you have lots of credit already, now chances are it is not going to impact your score a whole heck of a lot.
Right. Now, and if you have multiple inquiries, like on an auto loan or a mortgage loan, if they're within 30 days, they don't have as great of an impact. But here's the fact. Inquiries impact your score about 10%. So about
not that big of
10%
a
of your
deal.
score can affect your inquiries. Now, don't be confused like with an insurance company that does what we call a soft inquiry. A soft inquiry is not the same as a hard inquiry. A hard inquiry is you are truly applying for real credit. You want to buy a car, you want to buy a house, you're looking to buy a building, whatever the case may be. Those are hard inquiries. So, don't confuse the difference. Next
This
question.
is a good one. Will a poor score ever go away?
Yeah.
Yes, but it takes work. It's not the easiest thing to
wave the magic wand. Go away, bad
It's not the
credit.
easiest thing to do, but you have to work at it. It's not just one thing it's not gonna do is miraculously go away by itself. So if you had something happen, and a lot of people did during the crash, bad things happen to good people. If you stick your head in the sand like an ostrich and decide I'm not gonna do anything, well, people say that,
Did you see an ostrich on the way to the studio today?
They'll say, you know what, I had bad credit, so if I can't pay cash for it, I'm never, I just am not going to get it. That's wrong. Your score will remain low. You have to offset it with good. So if something bad happened, that's fine. But until you get some good trade lines going, your score is always going to stay low. It's a balancing act. You have to show the computer good stuff. Time and credit. You need good credit to offset bad credit.
Longevity. Okay. Can I get a mortgage loan after bankruptcy?
Yes.
Yes, you can.
Yes, you can.
Not tomorrow.
Again,
not the next day, but soon.
There's time constraints depending upon the loan product, anywhere from 2 to 7 years.
Yes.
But in addition to that, again, like we said in the previous question, you have to reestablish credit. So you can't just have all this bad stuff. You have to show good stuff. So get new trade lines, and people will give them to you. People say, well, I'm not going to be able to get it because I filed bankruptcy. Incorrect. You are going to be able to get credit. You're not going to be able to get an American Express the day after you file bankruptcy.
Probably not.
And it's not going to be the best card in the world. It's going to have a high interest rate. It's going to have a monthly fee or an annual fee or something like that. That's okay. Baby steps.
And I think the
to
key
reestablish
is
your credit.
Reestablish credit and make sure you're on time with that new credit.
Absolutely.
So that's very important. Okay. You know what this question is?
Kind of threw me off too, huh?
Is credit scoring unfair to minorities? So,
it actually reminded me that some people really don't know what things do affect a credit. I actually had somebody who thought their income
their income
would affect credit. Your income has nothing to do.
Your income doesn't.
And the credit bureaus do not know how much you make.
Right. And your marital status has no effect on it. Your gender has no effect on it.
Right.
So, you don't get an advantage because you're a woman.
Right.
Finally.
Right.
Sorry.
No, I have 2 children, 2 boys. I personally think that the minority is the white male, it seems these days.
Yeah, well, collections. How long do collections remain on your credit?
Right.
That's a good question. What's the gee whiz? The practical answer is, and remember, it's all a mystery, these credit bureau stuff. It really is.
But Mark really helped us, kind of put some stuff into, everybody hears 7 years, 7 years, 7 years, 7 years. However, and I've told you, people have said to me before, well, this is, I have this old collection, but it's supposed to drop off. It's 7 years in October, and it's going to drop off in October.
Yeah, so on October 2nd of this year, it's going to go away. Not necessarily. So keep that in mind. It's actually 7 years from the initial date that you missed that payment.
But
if you make another payment somewhere along the way, guess what? It restarts that clock
The
again.
7 years
so
starts
if you didn't
ticking
pay
again.
for a year, and then all of a sudden you said, yeah, let me send them $20 to shut them up. Well, guess what? It just reactivated. That can also hurt your score because now it's a newer bad collection.
Right.
It's more recent. So again, that time theory that you just shared applies to
And
this.
the other
So-
thing that Mark taught us was that as far as a collection goes, so maybe, the 7 years is almost up. That does not mean that collection agency can sell that to a different collection agency. And keep in mind, they buy these from each other for pennies on the dollar. So you
Right.
might owe $5,000. They're buying that debt for $50 or something from this person. So if they collect $100 from you, they're profitable. So they can sell it, and guess what? And it's another 7 years. And they can sell it, and it's another 7
So
years.
that's our next question. How long will charge-offs remain
There
on
you
the
go.
credit? So it's 7 years on a charge-off. So closed accounts, how long do they stay?
And that's another thing. Don't necessarily, like we said before, your oldest trade line, don't close it. Don't close it. As far as collections go, try and settle them. Try and do something. Try and pay, try and settle it. It could stay
But-
there forever.
But you know what? A positive closed account can actually remain for 10 years, and I didn't know that. So that's good to know.
Right.
So anyway, we got lots more tips for you on how to, where the big pitfalls are and the mistakes, but we'll be back right after this. All right, we're back learning all about this credit stuff.
I know, and how long it's going to affect your credit score.
It's kind of a wonder.
And the other thing, I know that we have all of this information that we're trying to plug in here, and one of the things that I did mean to mention before was how the credit affects it. One of the things that people don't realize is your credit score is not an exact science.
No.
Where, first of all, it changes every single day depending upon when each creditor reports to the credit bureau. So it changes every single day. And it also, certain things are important to when you're applying for a mortgage, they're going to get a different score than if you're applying for a credit loan, than if you're applying for a JCPenney's credit card or something like that. Each industry has certain algorithms, certain things that are important
It's
to them.
almost confusing, isn't it?
Right.
The way it works is
So-
like, why should, people say, oh, I just pulled it.
Yeah, how come
your
it was
score's different
Credit
than mine?
Karma said it was
Credit
this,
Karma
and
says this. Well, it's just it is.
It's
a
different things that
reading.
are important. So a car, we can all pull at the same time. A car dealership, a mortgage company, and a retail store can all pull your credit report at the exact same day, the exact same time, and all three of us get a different score.
That's
because
crazy.
different things are important to each of us.
It's crazy.
For example, the car dealership, they're going to be really concerned if you've ever had a repossession. As a mortgage company, we're going to be concerned with that, but not as concerned as they are.
Or,
So
yeah,
that's
if you
going to
had a
hit your score a
foreclosure.
lot more. We're going to, hit your score a lot more if you've had a foreclosure in the past. Whereas the Macy's card or whoever retail store, they might not care as much.
Yeah, it's totally credit. It's totally credit crazy.
It's credit crazy.
Credit crazy. So,
I think we just named the show, Credit Crazy.
Here's what people do. They think, oh, I had a delinquent card, so I'll lose that card. How does
Yeah.
that affect us?
Yes.
A lost credit card,
Right.
you know?
Yeah, that's not going to get you out of it.
Yeah, so here's the facts on lost credit card. A question came in. If you have a lost credit card, it's still reported from 2 years from the date card was reported lost. But if you had delinquent payments prior to you reporting it stolen that occurred, they're going to last for 7 years on your credit report. Good to know. So just because you lose a card and close it
Right.
doesn't mean
not gonna take
those
it off your
delinquent
record.
debts are gone bye-bye. They're still
No.
there.
Right.
That's really interesting.
And that's the other thing that, it's not part of the question, but the people think if they pay off something that was delinquent.
people call you all the time about
all
this?
the payments go away. All the bad payments go away. No, they don't.
Yeah, no.
Right? People think that, oh, yeah, but I paid that off. That shouldn't still be on there. Yeah, it's going to stay for 7 years. It's
All
going
right.
to stay.
What about bankruptcy? This is your
Bankruptcy.
favorite.
I know, because
And
this
it's so
one
funny how
does
different-
come up a lot.
Yeah, because Chapter 7, Chapter 11, Chapter 12 are different from a Chapter 13.
So
7, 11, and 12 will remain for 10 years, and a Chapter 13 was 7 years from filing date.
And
Isn't that
all of the
funny?
debts that was included in the bankruptcies will remain on for 7 years.
That's pretty interesting.
Yeah.
All right. How about city, county, state, and federal tax liens?
Yeah,
That's
this one's
good
another
question.
surprising one.
So if you have an unpaid tax lien, they'll actually remain on your credit for 15 years. So that's a big ow.
Right. I know.
Ow. I feel like E.T.
15 years.
Ouch. Do you
So-
remember that movie?
Yeah, that was E.T., right?
Yeah, very good. Thanks for keeping up with me.
Sorry.
If you have a paid tax lien, it'll remain for 7 years. So
So a
I
lot
know
of
this is your favorite thing.
Well, a lot of people, here's a nifty-difty little chart here. A lot of people are always asking, and
Because people
nobody,
call you all the time.
they do. Nobody knows exactly. I always tell people, it's like this big mystery.
Elton
How many
John.
points will my score drop if I have a late payment? How many points will my score drop if I apply for a credit card?
Here-
How many points will my score
I
drop?
have a suggestion for
I
that.
don't know.
I have a suggestion. Don't be late and don't
Yeah,
find out because it
because-
could impact you more than you know. And you would think somebody with a lower score, it would impact more. Well, it can because somebody with a 620 score can tumble down below a qualifying rate to get a mortgage, a qualifying score rather, to get a mortgage, where somebody with a 780 score might have a bigger tumble in their score drop, but they may still qualify because of that. But
And as we said, and it all depends on who's pulling your credit. Is it a
Exactly.
mortgage company? Is it a
So-
car dealership? Is it Credit Karma? Who's pulling your credit? That's going to make a difference.
So if you have a maxed out card and you have a 680 score, a maxed out score, I can't even say that. Can you say it 3 times fast?
Maxed out card.
Yeah, 3 times fast. Try
Yeah,
it.
no.
Yeah, no. If you max out that card, it's going to affect your score 10 to 30 points if your credit score is currently a 680. But if your score is a 780 and you max out your card, it's going to drop your score 25 to 45 points.
Right.
That's crazy.
So yeah, so that we're going to do, this is the difference between a 680 score and a 780 score, how much these items affect your credit. So the next one is a 30-day late payment. On a 680 credit score, if you have a 30-day late payment, it's going to affect your credit score 60 to 80 points.
And a 780 score is 90 to 110 points. That's interesting, isn't it?
Yeah.
Again, I like this next one, debt settlement. If your score is a 680, debt settlement means you settled for less than, what you agreed to pay on the account. 680 score, people, it's going to hurt you 45 to 65 points. But if you have a 780 score, it's going to hurt you big time, 140 to 160 points.
Right.
That's crazy.
The next one is foreclosure. Foreclosure is going to, on a 680 score, 85 to 105 points. On a 780 score, 140 to 160 points.
That's crazy. And then
The higher your score,
the more
bigger it
impact.
is, the more
and
you
here's
fall.
the biggest one of all, bankruptcy.
Number one question we get.
Bankruptcy. How much does it hurt your score? Well, 130 to 150 points with that 680 score. 220 to 240 points. So now your 780 might
With
as well
the
be
780.
a 2. That's a big hit.
It's a big hit. The
you know,
bigger they are, the
but you know
harder
what?
they
If you
fall.
did a bankruptcy, they say within 2 years or immediately your score with good credit reestablished can go right back up quickly because obviously you get a 240-point drop.
So here's the big thing about credit. Don't hide from it. Definitely know your credit score. There's a lot of good things. We told you annualcreditreport.com. You can get a
Yes.
free credit report once a year. By all means, do that. Monitor your credit. Look at your
And you
credit.
don't-
Definitely don't hide from it, and talk to a
And-
credit person.
And you don't get your score on the annualcreditreport.com, although they will allow you to purchase it. So,
Yes.
hey, this is great information. We could do
One
a
thing, though,
two-hour
I do
show.
want to say,
What?
don't go to the credit repair companies willy-nilly and just do that. Definitely talk to somebody in the lending industry first, whether you know a loan officer at a mortgage company, a real estate agent who can hook you up with somebody, because we can give you some guidelines before going down that path.
Very good. So get us out on social media. Share this good information.
Like us.
LinkedIn, Twitter,
All those fun
Facebook.
things. We have
Anything
time
else?
for
Just a
events.
quick plug for the trolley, the 24th, going WPBA.biz. It's a trolley pub crawl if you want to come along. I think there may be seats available, maybe gone by now, but check it out online in WPBA.biz. So
We appreciate everybody watching and sharing and liking. We are
Yes.
today and every day.
moving forward.
We'll see everybody next week.